Hey, this is Awais with EminiPlayer.net, and this is a recap for Monday, August 13th. So looking at our trade plan, a couple of things to note. One is that we needed to see initiative buying in order for price to hold above 1401. And second is that we were expecting a relatively dull session where any break to the upside could be met with responsive selling and would get a rotation back down. And likewise, any push into support would be met with responsive buying with a push back up. So we weren't really expecting a lot of movement today with no econ reports out, no real catalyst to drive the market. The expectation was for just responsive sellers to be active on top, responsive buyers to be active below, with 1394 as the bull bear line in sand. So that was our key level. And above that, we were going to hold a bullish bias, and then below that, we would look for bearish setups. This morning's open was pretty interesting because we had some very mixed signals. So we opened at 99.5, established the opening range, 98.5 to 1401, and then price breaks above it, which would indicate more aggressive buyers in the market. But then you look at the market internals, and you see that the S&P Advanced Decline is heading down, very weak. The New York NYSE AD is also heading down. But then you had the VIX, which actually opened gap down, which is a bullish scenario, and then just kind of held near the lows. And if we look at the 1 minute, we can see that the NYSE tick is spending more time below zero, not really getting any directional move. So, pretty confusing open overall, but there were still more signs pointing to a break to the downside than a move to the upside, because you're not getting any momentum on the upside here, and you need to see initiative buying in order for price to hold above 1401. Whereas, the opposite scenario of just pulling back, you don't need to see initiative selling. This would just be a normal pullback testing, previously accepted areas from Friday and last week. So we don't need to see initiative internals to the downside in order to pull back down to initial support, but we do need to see initiative internals on the upside, which we weren't seeing. So definitely not looking for any longs over here, and looking to enter short in these areas above here. And one other thing we can look at, another tool that I use, is Market Delta's footprint chart. So we can see over here that this push up to 1402 quarter gets sold into pretty aggressively. We get a negative delta. So more aggressive selling happening up here. And then we can see on the next bar, the delta is positive 434. Again, very weak buying. And on the next one, we get more aggressive selling again. So this was definitely a short setup up here with target at initial support. And that worked out pretty well. We came back down, got responsive buying at initial support, and we can see that we're getting some positive tick divergences over here. So this is a spot to cover your shorts and start looking for any setups on the long side. And if we look at the footprint again, we can see that down here the retest of 96 is not getting a lot of activity on the sell side. So on first test of initial support right here, this is a long setup. But once you get in this long trade, what you want to see is the market supporting that hypothesis, right? You have an hypothesis that responsive buyer is going to come in at 1396. Then what does the market need to do in order to confirm that that scenario is actually playing out? Well, one of the things it needs to do is the NYSE tick needs to actually make a push above zero and get some sustained movement above zero, which we can see over here that even though we're getting these bounces, they're being sold into. The ticks are not holding above zero, overall very weak. So this is a signal over here to either take a break even or small profit on that long setup, and then look to enter again near the bull bear line in sand. 1394 was really key, and this test happened on a positive tick divergence. And if we look at the footprint, let's just scroll over to 1394, and we can see that we get this one flush down, pretty heavy delta, but then on the next one it's actually a delta divergence, right? Move down on negative 15,000, and right on the next bar we get this bounce back up. On the next one, again, very weak selling. And even though the internals were fairly negative, trade location really supported longs over here, right? Because our entire idea on the day was that if price pushes down into support, we're going to have responsive buyers active. They're going to push it back up. And from a trade location perspective, the bull bear line in sand is really the key level, right? That's kind of the divider between where buyers are in control and where sellers could regain control. So if buyers are going to enter, that's really the best spot for them to get in, is that 1394, 1394 half, that area. And we can see that, the low of day was 1394 quarter. So this was a long setup, and we're basically looking for rotations back into the broken support zone. So broken support equals resistance. First time back up, we get a rotation down, retest top of the zone, rotation down. At this point, we're holding the IV low, so we're going to look for a move higher. So the initial target on that long setup off of 1394 is really going to be 1398. That's going to be the first target. And the second target is going to be around the 1400s. And we can see that at this point, the low of day was already in, so we just get rotational moves up, back up to the gap fill and the pre-market resistance into the close. So that's really how the day played out. As far as the trade setups on the day, kind of the ideal trade setups that I see, one is the short setup over here, and then after that, it's the long in the 1394, 1395 zone right over here. And basically, we're taking those trades against the bull bear line in sand. And if you're getting in over here, stop loss is 1393. So from a reward risk perspective, these are really good long setups. I would not be scalping these short just because it's very close to 1394. So this area is really focused on longs. So we have one primary trade going down on the short side, and then we have one trade going up on the long side. And then these little rotations, I would just personally, I would just avoid those. I don't think those are really worth putting on a trade for. I think the overall context wasn't really supporting taking these little shorts so close to 1394. So that is the recap on the day, and in future videos we'll go over specific setups having to do with the market delta footprint, and we will be streaming the market delta footprint in the live trading room that we're going to launch in a week or so. So anyone who's in there will definitely get more familiar with how to use the footprint and how to really integrate it into your trading. And the footprint can really give you some really good setups where the stop loss is 4 ticks, 6 ticks, and the profit targets are always in the 3 to 5 point range. So we'll get more into that probably next week. If you have any questions, feel free to post them in the comments, and I'll definitely get back to them as soon as I can. Other than that, I hope these last few days, I know we've been in this narrow range, not really a whole lot of activity, but I think we've been able to stay on the right side of the market, and that's key. If you're having trouble in this market, I would say just reduce the number of trades you're taking, because it's very easy to get chopped up in this low volatility environment where there's not a lot going on. So just reduce the number of trades, look for just ideal trade setups. If it's not meeting the criteria of being a very good setup, if a lot of things aren't lining up, then just take a pass on the trade and wait for the next one. So I think these kind of markets just require more patience. But the setups are still there. I mean, there are some very good trades even in this market. So I hope everyone is doing well. And overnight, we have broken out to the upside and tested pretty close to today's initial resistance zone. We got some sellers over there, 1 tick ahead of it. And so far, the upside scenario is still being supported. We're going to go ahead and use 95 half to 97 half as the bull bear zone from this point forward. And as long as we hold above it, I think those yearly highs in the 1411 to 1413 range are definitely within reach. All right, I will catch you guys tomorrow morning.